Hello, good morning, friends. Today we will discuss about GST, Goods and Service Tax. Yes, the Goods and Service Tax is nothing but a successor of VAT. Earlier we used VAT. In the place of that, central government introduced a GST that is levied on supply of goods or service. Both VAT and GST have same taxation slabs and it's a comprehensive and multi-stage and destination-based tax. Comprehensive. Why it is comprehensive? Comprehensive because of it has subsumed all of the indirect taxes except a few state taxes. That is multi-tagged as it is. The GST is imposed on at every step in the production process, but is meant to be refunded to all parties in the various stages of production, other than the final consumer. And as a destination specific tax, it is collected from the point of consumption, but not point of the origin, like earlier tax or previous tax. And GST, goods and service tax, are divided into 5 tax slabs for collection process. That is 0%, 5%, 12%, 18%, 28%. Basically. And however, petroleum products and alcoholic beverages and electricity are not taxed under the GST. Instead of that, instead they are taxed separately by the individual state government as per the previous tax system. And as well as there is a special rate of 0.25% on rough precious and semi-precious stones like diamonds, gems. Government will charge 0.25%. Am I audible? Hello?
Yes, Ramarao.
Yes,
Okay.
sir.
Yes,
Yes.
yes. Please go ahead.
0.25% on precious diamonds and gems, as well as 3% on the gold. And in addition, a cess of 22% or other rates that will be charged on a top high-end GST items, 28% GST items, some items will be there. On that, a additional 22% cess will apply on several items like drinks, adulterated drinks, luxury cars, and tobacco products. And pre-GST, the tax rate for most of the goods about 26.5%. Later introduction of GST, the most of the products expected to be in the range of 18% tax range. It is somewhat benefit to the customers. Next slide, please. Right here. Basically, GST will collect 4 types. That one, Central Goods and Service Tax, CGST, State Goods and Service Tax, SGST, Integrated Goods and Service Tax, IGST, Union Territory Goods and Service Tax, UGST. Okay, we will discuss one by one. CGST, that benefit will goes to the central government and well as collection also done by the central government. This is CGST within a single state, that is Maharashtra state. And SGST, this will be benefit by the state government as well as collected by the state government, and this will be levied on within a single state, that is also intra-state. Next, IGST. This is benefited to the state, both state central government and state government, and it is collected by central government, and this will be levied on goods and services supplies between two different states or a state and union territory. That is interstate. And next one is UTGST, Union Territory Government. That is benefited to the Union Territory Government as well as collected by the Union Territory Government. And that will be levied on within a single Union Territory transactions. That means transaction happened in that single territory, Union Territory. Yeah, transaction. Intrastate transaction, interstate transaction. We will discuss about intrastate transaction. Within the intrastate transaction, we will have purchases, GST on purchases and sales. On purchases, input CGST, input SGST. On sales, output CGST, output SGST. Whereas interstate transaction on purchases, that will be levied input IGST, and sales output IGST. Okay. Basically, input GST that will be levied on purchases. That is, we will pay to the others while purchase the stock from vendor. That is a current asset. Why it is current asset? We will claim at the time of GST payable at the end of the month. We will pay the GST like output GST minus input GST. So like that, we will claim that input credit. So that will be current asset to us. Output credit. Output means when we done a sales, we will collect from the customer. Means we will collect the tax on behalf of the government. Means at the end of the month, we have to pay to the government. So always that will be current liability. Okay. Next, and the tax, the GST tax came into the effect from 1st July 2017. That is through the implementation of 101st Amendment to the Constitution of India by the Government of India, and as well as 1st July is celebrating as the GST Day. And the GST is replacing the most of the existing multiple taxes levied by the central and state governments. And the tax came into effect 1st July 2007. Okay. Next, we will discuss the journal entries, how it will come. For example, at the rate of 5% GST, we have purchased a stock from vendor. That is, in normal entry case, purchases to vendor. While GST, purchases accounted to 1 lakh, input CGST accounted to 2,500, output CGST accounted to 2,500 to vendor or creditors 1,05,000. If it is a intrastate transaction, purchases accounted to 1 lakh, input CGST 5,000 to vendor or creditors 1,05,000. And coming to the sales scenario, same like we will take 5% GST tax rate as example. Debtors accounted to 1,05,000 to sales account 1 lakh to output CGST 2,500 to output SGST 2,500. Whereas interstate sales entry will come like debtors accounted to 1,05,000 to sales account 1 lakh to output IGST 5,000. So entries will come like this. If you take any tax rate, what pattern of entry is like this one. And next, we will discuss about the configuration steps. Some of the total 7 configurations will be there. And first one is define tax access sequence. That is, T code is OBQ2 or OBYZ. And next one is define condition types. Tax. Tax code is OBQ1 or OBY. Third one is create account keys. That is OBCN tax code, T code. The fourth one is define tax procedures. T code is OBQ3 or OBY. Fifth one is assign tax procedure to the country, OBBG. And sixth one is create tax code in country, FTXP. And seventh one is assign GL accounts to account keys, that is OB40. Next. Gayatri garu, next slide. Yes, this one only. And for example, we will configure these steps like this. Define tax access statement like CTAX in OBQ2, and define condition types like we will take like this CACT input CGST. That is our opinion. We can take anyone. CACT input CGST, CIST input SGST, CIT input IGST, COCT output CGST, COST output SGST, COIT output IGST. And next one is create account keys. The T code of OBCN. We can take like this CIC input CGST, CIS input IGST, CII input IGST. Next COC output CGST, COS output SGST, COI output IGST. Next step is fourth one, define tax procedure. In OBQ3 or OBYZ, we have to give C-tax India in. And fifth one is assign tax procedure to the country, that is in the T code of OBBG. Next slide, please. Yeah, next one. Create tax code in country, FTXP. We will create like this. C1 input tax rate 5%, that is including of CGST, SGST. C2 input GST 5%, IGST. M1 output CGST 5%, CGST and SGST. M2 output GST 5%, IGST. So like this, we can create number of tax codes, 5%, like 18%, 12%, like this. How many we want, we can create like this. And next, assign GL accounts to account keys. Before this step, we have to create GL accounts in the FS00. For current for these three and for CGST, 3GL, and for SGST, that is output tax related 3 accounts. Here I have created 2,108 input CGST account, 2,109 input SGST, 2,110 input IGST. And for output CGST 105, I have created output CGST, and 105.6 output SGST, and 105.7 output IGST. We have to create GL, and next we have to assign that GL accounts to account keys for automatic posting. We have to do like this. That is all about GST. Thank you. Thank you, friend. If you have any questions, you can ask.
Yeah, stop recording.